Welcome to another episode of the Ticks and Trades Daily Recap for Thursday, December 12, 2024. The time is currently about 8:21 a.m. Eastern. The opening bell is over an hour from now. So yesterday, the CPI news set the stage for the bullish run most of the day, but price stalled out before they got to the neighborhood of the former all-time highs. Now, the next morning, they've retraced a chunk of that up move in the overnight session. There's a PPI data release in less than 10 minutes from now, so we'll find out soon if that information will have any bearing on what price does before the open. The levels on the board today include a zone between 606.07 and 605.78. The dashed lines, the dashed levels. This should be an important area, and I'll go ahead and call this an access point that the bulls would probably like to keep price above to keep price elevated, and the bears would like to push price below this zone, which would make it easier for them to keep price going lower. Price has already bounced from the top of the zone earlier in the pre-session. I think it will still be important during the regular session if it's hit. After the closing bell, we'll revisit this chart and talk about any trades in the E-mini futures that may have been entered based on these daily levels here in the SPY. Catch you on the other side. And we're back. It's 7:43 p.m. So the zone was important. Really the only thing they did, because the level they hit down here, 604.52, was too late in the day for anything to work. I wouldn't have taken a trade that late. So let's talk about what you would have done, play in by the rules at this zone. And then I'll show you my trade, which I took, which is essentially the same, but jumped out early, and I'll explain when we watch it. So on zones, I don't adjust them with that 5-cent buffer like I do regular levels, because really this whole thing is a big fat level. We're going to treat each extreme of this zone like an individual level for the purposes keeping the tracking log consistent, because that's the way it's been done every single other time. So 945, it's up here. Here's the 945 candle close. Price was up here. Instead of going higher, they came down. So buying at the top of this zone, buying at 606.07 or wherever the E-minis were at that moment, a market order in the E-minis. If they don't give you a bounce from there, then you need to be willing to buy again if they get down to the bottom of the zone, 605.78. So your combined position, because that's what happened here when they went down to the bottom, was right in the middle. So about 605.93 or the equivalent in the E-minis. So at the risk of making this confusing, I'm just going to go ahead and put the lighter blue line here as your average entry point, because that's the equivalent or thereabouts of where you would be in the E-minis if you went long at both of these levels. So right at this point, you'd be at the light blue line looking to get 4 points in the E-minis. Up here, your fumble threshold is down here. Well, they got pretty close. I mean, just barely. The high was 606.24 there, and it was 606.25. So yes, within 10 cents before they came back quickly within really a minute or two, hit your entry point. So playing by the rules, you would jump out at a wash right here, because you don't know if that was it. They're going to go lower. As we can see now, this zone was important the rest of the day. Even if you waited this out and you were out of the money down here under this fumble threshold, there was no harm in the amount of time they spent underneath here. And they would have given you base hit. We're not going to count it. It's just a wash because of this little thing here. And I actually jumped out just a little bit late and lost a bit of money on the way down. So what's this level here at 605.20? Well, this morning, it was one of the levels I had on the board. I removed it from consideration before I made the morning video and sent the levels out to those on my email list. And I regret it now. I'm not sure what I was thinking at the time. It seemed too close. I had this general idea that if this zone didn't hold, that they didn't bounce enough for a base hit out of this zone, and they got lower this, I'd want a better price out here. I knew this 604.52 was a good level, but they found this interim spot here at 605.20, and that would have been a great trade there. And later in the day, you can see that level was somewhat important. Then they got down to 604.52, and we're not counting that because look what time it was. Because it was 4 or 5 minutes before the closing bell. There's no way I'm going to enter a trade that late in the day. So anyway, no official trades. You would have entered a couple, but you would have jumped out at a wash if you were very strict, played by the rules. While I'm not going to take this same area for another trade on the long side, you can see this zone was important at least a couple more times. But at some point right here around 2 o'clock or so, they got under this zone, and this could be a tell of how they look going into tomorrow. Before we look at some longer time frames to talk about what might be happening in the near future, let's look at the trade that I took. I want to point out a few things before I start rolling this recording. So notice the time, it's 9:32 in the morning, and yet I already have 2 limit orders on the chart. And you know I don't like to enter trades before 9:45 in the morning. I like to give the market 15 minutes to settle in. But I had an appointment that I had to leave for at 10 a.m. I thought maybe I could just get a quick base hit of 4 or 5 points earlier in the morning if they came down into this zone quickly, which it looked like they were doing right after the open. So here's me going long, looking for 4 or 5 points. There's 6 points. And then they get down to the next level and I buy again. I've got fumble threshold profit target of a base hit from the top level here. I averaged in like you normally would, but I was already in early. They kind of gave a near miss, but this wouldn't have really counted. There's the near miss of the profit objective based on what I did. We already talked about that on the combined position. But anyway, so they weren't giving me what I wanted. I brought the profit objective down lower, closer to my break even. And finally, I just closed the position out when they were underneath this and dropping, because I just didn't have time to wait around to see what would happen. And of course, there was that safety net underneath there at the 605.20 level. But I was gone at this point and didn't really look at the computer other than checking the market out on my phone a few times during the day, but didn't make any trades after this. So you'll see me jump out. Well, I'll move the profit. There we go. Move it down. They don't come up to give it. I'll just move my cursor out of the way so you can see. But at some point, I jump out. It's around 3 1/4 points or so. When I close it out, the video just started over here. When I closed that position out and lost $325 or something on that position. So I don't know. If I had time, I probably would have found some reasons to stay in the trade and reminded myself I had that safety net underneath there. And that whole zone would have given a base hit had I stayed in it. But as we already talked about, strictly playing by the rules, it was a wash. I believe it's better to have a process to follow, so you're getting out at 0 instead of taking a loss if you don't know what you're doing. In my case, I probably shouldn't have just jumped in that trade earlier without a clear game plan. But anyway, I got what I deserve, I guess. So on the daily chart, they're down again, and this is what it looks like. They're kind of just developing this little range here. I'm just going to look at the weekly chart here because we have one more day in the week, and I'm curious what they're going to do there. No sense in looking at the monthly chart because we've got a couple more weeks in that. I mentioned a few days ago, I think it was earlier this week, that down here around 600, give or take $1 or so, would be a pretty good area of support had they come down pretty quickly. The fact that they've bounced up, they're kind of come back down again, changes things a little bit. We'll start going down to some time frames. 3-hour chart, they're under the 20, still above the 50. Coming into the 50 period on this 2-hour chart, they're under it in the 1 hour and so forth. So things are kind of a little different. I mean, there's going to be some gaps, there's going to be some retracements, other reasons that we could find some support. But in the bigger picture, they could go sideways for a while. In fact, you know what? Let's go ahead and jump all the way up to the monthly just to point out how far they are. If I reset this chart, this is what it looks like to scale. So, yeah, we have 2 more weeks in the month of December, but they're very extended. It wouldn't be surprising for them to stall out at some point, either go sideways or pull back. Generally happens when they get pretty far away from the 20 period, this far extended. No hard and fast rule. It's just we're going to start seeing more of this kind of thing here, establishing itself on larger time frames. And once we get to a daily and weekly, and now they're under, say, the 50 period moving average, then we've got something going on. So they've got a long way to go. There's a lot of space that could happen in here. No predictions. I'm just making an observation here. And as you know, by tomorrow morning, there will be more refined levels that have more relevance on our intraday trades anyway. That's just a picture of what they look like currently on the daily chart. And on the logs, the first one is the PBR. You can read the notes. Nothing's color-coded here. They're all bold because all these levels were hit, but no actual points gained because if you were strictly playing by the rules, you would have jumped out before incurring any kind of loss. So you'd be pretty much around your 0 line if that's what you did. On the trades that I took, essentially was a fumble by definition because I gave back 3 1/4 point on that 2 contract position. And then, of course, the last level, 604.52, way too late in the day to be traded. So that's a wrap for today. Thanks for watching. I'll be back tomorrow morning with new levels, and we'll talk about how the week might wrap up in anticipation of next week's FOMC announcement and where they might want to get priced before that happens. There probably will be some increased volatility coming to a chart near you. We will find out soon enough. Thanks again. I'll talk to you in the next recap video. Have a great rest of your day.